10 years ago, I thought life would be balanced and perfect, you know what I mean? And you get there and you're like, it's not, it's still just a mess. You're still figuring it out. Well, the thing is, I don't want to get to looking forward another 10 years when I'm 50, because you get there and you realize you'll still have problems. You'll still have stress. You'll still have things that need to be done. You have a never-ending task list that needs to get done every day that you don't get to. And so that's what I've realized, is that I think as humans and as honestly Americans, we get addicted to work. We get addicted to that. Just every day I have to go and grind. I have to go and figure this out. Well, you don't have to. It's an addiction. We get used to it, but you just have to mentally break away from that and say, it's okay if I don't get everything done. I guess what I'm saying is it never gets easier. You have to make the mental choice to do it.
Welcome back to the Syndication Show. My name is Kalani Michelle, and we are here with special guest Clay Rockwood. And I'm also here with my co-host, Christian Sadler. And Christian, can you tell Clay a little bit more about what PREiShare is and what exactly we do?
Absolutely, Clay. Thank you for coming, by the way. I know that we've been on the same stages at different times, and we've probably been in the same room, but it's nice to meet you in person, and excited to learn more about your story. So before we get into that, though, I want to talk a little bit about PREiShare. I know we had the conversation on the phone, but just to kind of clarify, PREiShare is creating something that we believe is really going to change the industry, specifically for syndicated real estate investments. And so some of the things that we're going to put in place, and I think one of the biggest things that is different than what's happening in the market, is our liquidity service. So what we want to do is we want to create essentially a secondary place for somebody to sell their fractional shares. I know that you've done some raises, and you probably have had people that come into a position where maybe they wanted to ride with you for the whole ride, but something came up and they needed access to that capital. And usually there's just not a lot of options for them. And so we have a fund that we're creating with PREiShare that will be able to buy those fractional ownerships. And then on top of that, within the group, we're creating a listing hub. And on that listing hub, people can list those fractional shares, and any accredited investor can make an offer. So they'll have the open marketplace, but they will also have kind of a go-to source with us and the fund. And then with that fund, the other things that we're going to be doing is for a second option is top-off services. I know that you had mentioned the other day that you're right smack dab in the middle of a couple of raises, and there's always those sleepless nights at the final hours. Money has gone hard. Maybe you need that extra $100,000 or $1 million, depending on the size of the raise, and you don't yet know where it's coming from, and you're just kind of trying to get to the finish line. What we want to do is pre-approve good sponsors to where we can say, hey, you have access to this amount of capital for that deal. And so if you ever need it, hopefully you're able to get all your money in your own ways, but if you ever need it, you can just pay us a little bit of a premium so that we can meet our yields and we can take you to the finish line. So that's one of the big things. And the last thing that we're going to bring to the table from the fund specifically is also pref equity. So if you're in a situation where maybe a remediation comes about that you didn't expect, or the cost of capital goes up like it's been doing recently, and all of a sudden your debt ratios have to be adjusted in order to get a refinance done, and you don't quite have enough capital on the books. So rather than going and doing a capital call to your investors, which sometimes can really turn people off from wanting to invest in the next deal, you could just come to us, and it's going to be the same situation. We're basically going to say, this is the yield that we need to meet. And so we'll come in a pref equity situation and get you the funds that you need so that you can continue on with the investment and, get you to the end of it. And so those are some of the things that we're bringing to the table. The last thing that I'll just add in here is what we're doing right now. We want to bring good, solid content and promote good sponsors, people that are out there doing right by investors and are very investor centric in when they build their syndications. We want to give them as much positive clout as possible and just help to build this industry as a whole.
Oh, that's great. Well, it's awesome what you guys are doing, and thanks for having me here. I'm really grateful.
Yeah. Thanks for being here.
Yeah.
So with that, I'd love to hear a little bit about your story and for the audience as well, give them the opportunity to kind of hear how you got to where you're at now. I mean, it seems like I'm seeing your name all over the place, at least here locally in Utah, and some of the things that you're doing. And you're not just in one aspect of real estate. It seems like you have your hand in many different aspects. And so I'd love to hear how it all started and how you got to where you're at.
Yeah, great. I think I'm just kind of the average Joe, right? I'm nothing special. I kind of have the backstory of a lot of people that I've met in this space and a lot of people that I've mentored and helped. But, I, straight out of college back in 2008, didn't really know what I was going to do. The market was crashing at the time, similar to actually what it is kind of doing now, right? A lot of uncertainty in the market. But being fresh out of college, my brother had owned a bunch of properties. My dad had owned properties in the past. And so that had always kind of interested me of the concept of owning real estate. And so I just, right out of college, got my real estate license and just said, hey, I'm going to try this for a year and just kind of give it a shot, see how it goes, right? So I did that for a while, and my wife and I got married at that same time. And so I knew that I wanted to buy a place that we could live in, right? So when I went out looking at homes, obviously they're super expensive for me at the time, being fresh out of college. My wife was a teacher. So I thought, hey, we could go buy a multi-unit, a duplex or a triplex, something like that, and live in one, rent out the others, and supplement our rent. So that's what we did. We bought our first property. It was a triplex back in, I think it's 2010 or 11, somewhere in there. And there were sleepless nights there. Just with that first purchase, how getting into real estate can be really daunting and scary. But once we bought the property, lived in it, and kind of saw the power of, hey, I can live here for free, where other people are paying my mortgage, paying down the debt, and over time this property is appreciating in value. So that's really when it clicked for me back then. And I knew that, hey, I want to do this full time. I want to buy properties. I want to be a real estate investor. And so that's kind of where the journey started. Fast forward, almost 15 years now, 10, 15 years. Have bought, we own a portfolio now, a small portfolio of about 370 doors, valued about $40 million. So we've definitely grown it from where we started, and slowly getting, bigger, hired a team, have partners and things like that. So yeah, there's a lot that's gone in between there, and we could talk about it if you want, but that's kind of where the journey started for me.
I would love to know, and I know the viewers would love to know, it's always fun to hear when different real estate agents or real estate investors, whenever they get in a syndication. So what was your first syndication like? And did you even know that you were getting into a syndication?
Yeah, great question. Initially when we'd buy properties, I would either self-fund them, or I had a handful of investors, mainly people that I knew had money. Some were hard money lenders, things like that. They would partner with us on deals. So initially, for a lot of our purchases in multifamily, we would kind of just work with one or two people. It wasn't a syndication, right? Well, it wasn't until we started getting into larger deals or doing more and more deals where we were kind of tapping those people out. They were saying, hey, I don't have any more money to invest with you, And so we kind of were looking at it saying, okay, well, what do we do, right? Well, let's go tap into a bigger network. Let's go raise more money. Let's go, raise money from other people that may not be in our network. So actually, one of my first syndications was a deal that I raised money on for another operator. And that was interesting because it kind of helped me learn the whole process, and from that perspective, right? Raising the capital and seeing how the operators handled it. And once I saw that and I'd raised the money for it, I was like, well, shoot, that's not that bad. I can do this, And so we've done several syndications now. And, again, it's just a learning process, little by little, step by step. Again, I've started over a decade ago doing this, right? So it's not a overnight thing. And you guys know real estate is not a get rich quick scheme. It's a get rich slow, right? So just step by step, little by little, you start learning the ins and outs and the business.
Yeah, that makes total sense. I would love to know kind of some of the things that you did prior to getting into syndications. What are those steps? Because you started out with basically house hack, right?
Yeah.
Which I think is such a great strategy for anybody wanting to break into real estate. And like you said, that's where the light bulbs start going off. And then from that, did you continue to buy and hold with rental properties, or did you start flipping or wholesaling properties? Like, where'd it go from there?
Yeah, good question. So as an agent, I started as a realtor, basically. And I soon realized I didn't like being an agent. It just wasn't my thing. Again, because my whole goal behind buying real estate and getting into real estate was I wanted freedom. That's most people, right? They want financial freedom. They want time freedom. They want the ability to do what they want, when they want, where they want, with whoever they want. So I thought, hey, as an agent, I'll be self-employed. I can make my own hours, I can do what I want. Well, that's not true, right? You have clients, you have to go show homes, nights and weekends were busy, especially as we started having kids. That just became less and less desirable for me. So then I started looking into flipping homes. My brother's a contractor, my dad's an architect, so I said, hey, we could form a group here, a company, and start flipping homes. So a few years after getting into the business, I started flipping homes, and that was really profitable. But again, it was a very time-intensive and transaction-intensive business, right? Where it's like, okay, we did one flip, we made 20, 30 grand. This is great. Well, now we got to go find the next deal and renovate the deal and put it on the market. And if the market's not great, what happens? We can't sell the property. We lose money. So nothing against flipping. It's a great business, and we still flip homes. But I realized I wanted more than that. I thought there was a better path. So that's when we bought our first property and started realizing, hey, I have a goal here to buy a property a year. If I can just buy a property a year, that was my goal at the time, I'm going to be happy, and in 10, 15 years, I can retire and be great. And I kind of kick myself now because I was thinking so small of one property a year, one duplex or fourplex, because at the time thinking of how could I go out and buy a 50 unit or a 100 unit apartment? Like that was so daunting and so beyond what I could comprehend. But I kick myself now because I'm like, if I just would have thought bigger and believed in myself and gotten rid of those limiting beliefs, I would have realized it's a lot simpler, not easy, but simpler than I thought, right? So after that, flipped homes, started wholesaling, real single family residential properties, started doing a lot more marketing direct to seller. And as a byproduct of that, we started finding a lot of off-market multifamily properties. So again, these were, mom and pop type, operators that had owned these 10, 20, 30 unit type properties. And so we found a really good niche in that space in kind of the mid-sized multifamily where we could find deeply discounted properties, direct to seller, off market, and we could go in, renovate them, refinance, pull all the cash out and just cash flow every month. So that's kind of the niche we started in. It wasn't really until the last few years that we started kind of growing into the, I would say, larger deals, syndicating and things like that. So yeah, it's kind of been a journey through all different niches of real estate. But yeah, I guess the big takeaway for me is that thinking bigger and the power of building teams and leveraging the expertise of other people. And we could talk more about that, but that's a huge belief of mine.
Yeah, I think that's huge. And one of the things I would love for you to share is, how did you overcome some of those limiting beliefs, and what could somebody do to shortcut that process and start thinking bigger from the get-go?
Yeah, I think the biggest hurdle that I had and thing that I regret is trying to do it all alone. I was a solopreneur. I would do all my own transaction coordinating. I would do all the paperwork myself. I'd make all the calls. I'd go on the appointments. I thought, at the time, well, hey, I can do it myself. Why would I pay someone to do that? I can save money, right? Do it myself. And it wasn't, until I kind of had an aha moment where I was like, I am the bottleneck here. I am the bottleneck to my growth and my progress and my wealth generation and everything. And my pride, really, right? It's pride and ego. And sometimes that means pride and ego to ask for help or to seek mentors and people that can help you and to approach other people and say, hey, I don't know how to do this. I could really use your help. And that's really hard for entrepreneurs to do, especially when you've had some success and maybe other people look at you and say, oh man, you're doing awesome. You're crushing it. It's hard to say, you know what? I don't actually have all the answers. I need some help, So that's really what changed for me, is just kind of humbling myself and leveraging the experience of others. So for example, if I'm going to go, or if I'm just starting in this business and I want to go buy an apartment complex, let's say I want to go buy a 20 unit apartment complex, right? Nothing huge, but still maybe sound daunting for the first time, real estate investor. Well, where do I start? I don't know anything about, rentals. I don't know how to, find tenants. I don't know how to sign leases. I don't know how to do maintenance. I don't know what the property's worth. How do I analyze this deal? Well, for me, it's about who's in your Rolodex. Okay, I got to get a good property manager, right? I can call them and ask them, hey, what is this property going to rent for? So that's one expert I could utilize. A contractor. Hey, I know nothing about construction. Can you come give me some bids? Help me to know what it would cost to renovate this property, right? That's another good expert. a mortgage broker, right? I don't know anything about loans. Like what kind of debt can I get on this property, right? Same thing with finding deals, a good real estate agent or a broker, right? So you start realizing how you can kind of assemble a team, and you're just the orchestrator of that team, right? You're just taking those puzzle pieces and putting them together. And that's really what I think my role has become as an operator or as an owner, right? It's knowing the pieces, who to call, who to orchestrate, and then how those pieces fit together. And then you don't have to be the expert in anything. You just have to know who to call and how to fit it together.
I love that. Something that Christian, I don't think that he had mentioned when we had started is we're rolling out what we are calling PREiShare approved sponsors. So essentially, we are professionally reviewing sponsors in multiple areas, whether it's, extensive background checks, whether it's looking at their track record, looking at their performance and how the actual performance of those deals lined up with the pro forma models, to a whole variety of other factors. And so you had mentioned assembling a team. That's one of the things that we're going to be looking at is, do these sponsors actually have a team? Do they have attorneys that they're working with? Do they have accountants that they're working with, property managers, and, and some of the others that you had mentioned? So love that you had mentioned that. Actually, Christian, is there anything that you wanted to tell Clay a little bit more about some of our PREiShare approved sponsors?
Yeah, I mean, essentially to get access to all of those services that we have, basically you'll just get approved with us prior to. And so that way you are already approved as a sponsor. And then when you send us over the deal, it's a lot faster of an underwriting process, right? So we can send that directly to our analyst, who our analyst actually is a partner to one of our key advisors. And they've done over $7.5 billion in real estate, syndicated multifamily specifically. So he can kind of underwrite that deal a lot faster if he already knows who he's working with, because otherwise we have to start with the sponsor, right? Oftentimes the deal is only as good as the person that is putting it in place and making it happen.
That's amazing.
Something that we have found, and I'm much newer to real estate than most of the other partners, is that a lot of these sponsors, they're just kind of like figuring things out as they go. Is there something that, any books or resources or anyone that you've kind of looked up to, or any resources that you've kind of relied on in helping you become a better sponsor for your investors?
Yeah, that's a good question.
Just trial and error?
Yeah, well, I mean, partially, right? But I think you can skip a lot of the headache and the heartache, right, of years of experience that you're going to gain just by trial and error. And one of those is, getting good mentors, good books. Again, I mean, there's so many good books I've read over the years that have changed, business books, real estate specific books, inspirational books. But yeah, having good mentors, I think I was talking to you prior to this about, a good friend of mine that is, part of a company that owns tens of thousands of doors, right? So I'll call him up and say, hey, how do you guys do this? And what I have found within this space is that most people are willing to share openly, right? There's no secrets, I mean, real estate to me is the most proven franchise model that's ever existed. Millions of people own real estate, right? There's no secret on how it works and how to do it. So yeah, I think it's just finding a good mentor, maybe going to some good seminars, some coaching programs, right? Things like that can help expedite kind of your growth. But at the end of the day, you just have to do it, right? And I think that's where a lot of people stop, is that you have to take massive, imperfect action, right? You're never going to have it all figured out. You're never going to have every, I dotted and T crossed. It's just not possible. There's so many variables and so many unknowns with life in general, but real estate, as a whole, you can't see everything that's wrong with that property potentially, right? There's a lot of things that could happen. So it's just taking action, reducing mitigating as much risk as you possibly can, but then just putting one foot forward and saying, hey, let's take some action. Let's do this, right? We'll figure out the rest if we don't know all the answers, but that's kind of how we approach it, right? So.
Yeah, makes a lot of sense. And I love what you talked about in building a team and not having to be the expert. I always surround myself with nerds, right? People that are nerds in their specific niche. So somebody that is an attorney, somebody that is an accountant, and they just totally geek out about that specific information. And when you were sharing what you were saying, it reminded me of the story of Henry Ford, right? And I think a lot of people have heard this story where he was in a libel lawsuit because they had basically called him an imbecile. And he was, defending himself, and they were asking all these arbitrary questions, like random facts. And finally, he said, why would I need to fill my name with all of that useless information when I have at that time, a row of buttons on my desk that I can push any one of the buttons and get the answers that I need to answer the question. And so it kind of sounds like that's what you're saying is if you have your team already in place, you just need to go out there and take action and make sure that when a problem arises, you already know which button to push, so to speak.
No, exactly. That's so true. So I kind of going back to what you're asking too is, for us, especially when you get into this space, larger deals and syndications, as you guys know, like your main priority now is taking care of investors, right? I mean, that's a huge risk investors are taking on us as the sponsor or the operator, right? I mean, this is their hard-earned cash, their hard-earned savings. And so that's kind of how we approach it is like, hey, we want to make sure this is the best experience for an investor possible, right? We want to take care of them. We want to build a long-term relationship so that they come back and keep investing with us long-term. So I know a lot of people in this space, they kind of approach it as like a deal-by-deal thing or a get-rich-quick kind of thing. But for me, it's like, hey, I'm in this long-term. Me and you, Mr. Investor, let's build wealth together. I want to help you build wealth. And by me helping you, you're going to help me, right? So that's kind of how we approach our theology behind investing and bringing on investors and things like that.
And I'm the same way. Like when I do business with somebody, I look at it as this is a lifetime relationship, right? This isn't something that we're doing something today. This is something that potentially turns into a long-term lifetime relationship. What are some of the things that you do that you feel like sets you apart as a sponsor to emphasize that point?
That's a great question. I mean, first of all, like I said, I think what's interesting is that there's so many opportunities out there right now. There's so many opportunities for people to put their money to work in whatever investment they want, whether that's real estate, stocks, whatever. So it's not like anything that we have to offer is necessarily different or special, right? The one thing that I think we do a little differently than maybe other groups, maybe larger groups, like I said, is we focus on kind of this mid-size to larger apartment complexes. But again, we target off-market, direct-to-seller, typically heavy value-add type properties. So we're targeting a specific kind of property that can give us very good returns to our investors, right? So we're not going out looking for the Class A's. We're not going to go compete against the Blackstones, these huge hedge funds that they can pay whatever they want to get nominal returns for their investors. We're specifically targeting the best of the best deals. We're underwriting hundreds of deals every month to identify the best property. So our methodology is not like, let's just do as many deals as we can. It's about, let's identify the best deals to make sure we're putting our investors' money in the best deals and in the safest positions possible. So that's first and foremost, is like, we're not just out there grabbing anything we can. We're very systematic about, let's be smart. Let's pass up on all these other opportunities. Let's not get distracted. But let's really implement this and crush it in our space. And I think that's kind of the track record we've built, over these last decade, really, of all of our multifamily. And as we've been proving this out, investors kind of see that. In fact, we have investors approach me now. They're like, hey, I've been seeing what you're doing. I love it. Like, I want to invest with you. That's what you want to hear, right? You want to hear investors come to you and not you having to go to them and like try to get their money. So I think it's just how you approach your deals. And I think it's your reputation, and I think people see that and they recognize that.
Yeah. You would really like our advisor, Mike Anderson. He talks a lot about how, because he's been in the space for a really long time, that how a lot of sponsors, they're not investor centric. Mm-hmm. They're not making decisions that are in the best interest of the investor. So love that you said that. And you two would just hit it off. So can't wait for you to meet him.
Yeah. Well, and one of the things that brought to my attention is when we are reviewing sponsors, one of the key things that we focus on is how do they communicate with their investors. I'm curious if you could share with us some of the things that you do to communicate with your investors, not only when you're going for the raise, because everybody communicates really well when they're raising funds, right? But what do you do in addition to that to keep that communication line open?
Yeah, great question. Well, one thing I like to do is I like to feel, or let the investors feel, that they're part of the deal. And I think that's where a lot of people they kind of have a separation. It's like, oh, you're the money, and now we're going to take the deal and operate it, and then we'll just send you your distributions, right, every quarter. Well, I've found that investors, they get pride in the fact that they own an asset, and they like to talk about it. Like, hey, did you know I invested in this 100-unit apartment complex? Like, it's pretty cool. Like they like to talk about it with their friends and family. And obviously you want them to talk about it because you want them to refer family and friends to you, right? For other capital. So I like to, like when we're sending out, updates, monthly updates. So we want to be in communication very frequently, at least on a monthly basis on, again, in our projects, we're doing heavy value adds. So we're renovating these projects and turning them around from an ugly asset to a beautiful asset. So we'll send out pictures before and afters, right? I mean, it's really kind of like a social media campaign in a way where, you guys are scrolling, you see the before and after pictures, the HGTV stuff. Well, people like to see that. And we do the same for our investors. It's not just a financial report with numbers, dollars and cents. It's, hey, here's a photo of what this apartment looked like before. Here's what it looks like now. And we just put this awesome tenant in here. This is a great family that's making this community better. We're providing stable, safe housing. You know what I mean? So it's almost, it's providing the story more so than just the numbers, right? And I found that investors really like and appreciate that. And it honestly gets them more invested in the deal and excited along the way, along the progress. And especially once we sell, it's kind of like a celebration. It's like, we did this together, right? Yeah. Now let's go do the next one.
I love that. Speaking of investors, have you had any investors or very many that are, apprehensive of the current market conditions and where we're headed? And if so, like, have they come to you and, wanted an out, or have you had anything like that yet?
Definitely. Yeah. I've had a lot of investors that I've talked to recently that are very apprehensive. And I think it's even making, syndication, capital raising much more difficult because I think there are a lot of investors sitting on the sidelines. So yeah, that's definitely a thing. I mean, and it sounds like what you guys are building is going to help solve some of that, right? Where if an investor may be in a deal and he's a little nervous, like, hey, I need some capital, I need to get out, working with you guys could solve that issue. So that's an awesome thing. But yeah, I think how to overcome some of that fear, at least right now, is, especially coming from an operator or a sponsor, is mitigating risk, right? So it's looking at all the risk factors and saying, how do we mitigate this? So for example, okay, in this market, comps, we're looking at all these comps that have been selling. Oh, they're all selling at five caps, right? 5 cap rates, right? At 5%. Well, we're not going to plan on that moving forward. Cap rates are going to keep rising. So let's underwrite this and model this at a 6 or a 6.5 cap exit. And then rents, same thing. What if rents dip down another 10, 15%? They've just been on the steady rise. Well, we can't bank on that, right? So we have to model it and plan for kind of the worst case scenario. So that's kind of how we approach all of our deals, with a, kind of a worst case scenario exit, and then best case scenario, and then, in between, right? So it's getting investors comfortable with those kind of things and having those kinds of conversations, because they've asked me recently, well, why should I invest in this deal? Like, what if the market keeps dropping? I say, that's great. If it does, we're safe because we've done X, Y, and Z to ensure that we're still protected and that your money is protected in that case.
Yeah, I love that you're giving both sides of it as well, right? Because if you go too far on the negative side or the worst case scenario, then people are going to be more apprehensive. But if you stay on the best case scenario, they're also going to be apprehensive, and they think that you're kind of, filling them full of fluff. So showing both sides, I think that's a huge thing.
Yeah. So what are you kind of seeing, or what are you and your partners thinking in terms of where we're headed? Like, what is your philosophy on, different syndications that you're going to be putting together? Are you guys slowing down? Are you kind of waiting for them to see what the market is doing before you launch some more syndications? You have a couple of raises that you're doing right now, though, right? Yeah. So you're not slowing down.
We're not. If anything, we're full steam ahead. Yeah. And again, I think it just comes down to the principles, right? And making sure the numbers make sense, making sure you're hedging against the risks and the downside potential. And like, for example, one of our deals now that we're about to close next week, actually, a big syndication. So we originally put it under contract for a certain price, and then the market kind of changed, the interest rates rose. And so we went back to the seller and just were honest with them and said, hey, we can't make this work. It just doesn't pencil now. And I think we found this in the commercial space. Sellers are much more in tune with what's happening in the market than maybe a single family seller. They're kind of lag behind there, but they were kind of aware and said, yeah, I think things are changing, so that we were able to get a heavy price reduction. So, still made the deal work. So I think nowadays it just takes a little more creativity and work, honestly, than it probably did before, where the market was just great and gravy. So we do a lot of seller finance deals. We add seller finance piece into the deal so that the returns still make sense. Bringing the sellers on as an owner. I mean, there's so many different things you can do to still make deals work. But again, the reason we're finding so much success, especially right now, where a lot of the big, in fact, I was just talking to a big operator that they said most of the big hedge funds, the big groups, they're literally pencils down right now. They're not underwriting deals. They're not looking at deals. They're not putting any money out, which is a fantastic opportunity for maybe smaller groups to come in and say, hey, the bigger groups are kind of waiting on the sidelines. I can go in and still find deals. But us, again, we're mostly direct to seller off market. So we're creating deals. We're creating those opportunities by our own efforts of marketing and hitting the pavement and going out to sellers. So I just found we were able to still find good opportunities even in a downturned market.
Yeah, I love that. You're tying in and stepping in where other people are out of the market, and that's a good place to be. You talk a lot about your value add. You do heavy value add deals, which oftentimes come with surprises. I wonder if you'd be willing to share some of the, maybe one or two of the biggest surprises you've ever run into with a property and how you overcame it.
That's a good question. Trying to think of some of our biggest ones. There's always things you don't anticipate or plan for. Like, for example, one of our properties, we hadn't budgeted for like complete electrical replacement, right? It's like, oh, we'll go and do, replace outlets and things like that. But electrician got in there. It's like, you're gonna have to rewire this whole place. It's completely bad. There's like splices all over the place. It's a huge fire hazard. So there's always things like that, which once you start breaking walls down and getting behind it, you kind of realize. But I feel like that's on every project. There's always surprises. So again, we budget for that, right? We collect some reserves up front. We make sure we're buffering that CapEx budget. But honestly, the reason I love heavy value add, and I shouldn't say most, a lot of groups I know that don't like those because it's just a lot more time and work intensive. They like kind of the light value add stuff. I love it because you see the huge transformation. We've literally gone from these properties where I would say 90 to 95% of the tenants are drug addicts, not paying rent, completely, destroying the property. It just looks really bad, and the owner's stressed and doesn't know what to do. We come in, we fix these up, we totally turn them around, and like we've literally had neighbors call us and be like, "Thank you, like you've changed the whole look and feel of this neighborhood." Like that's rewarding, when you can actually do good in a community, when you're not just focused on, again, the balance sheet and the profit and loss. It's like, hey, we're actually operating in a space where people live, and that's what I love about real estate, and specifically what the asset class that we work in is, mobile home parks and multifamilies. These are where people live. This is where they raise their kids. So it's nice to kind of think of it like that. And that's what I really like about the heavy value add stuff. But yeah, we've run into you name it. I've been there. I've walked into properties where I'm dry heaving because the smell and 50 cats, dead animals. It's just, we've seen it all over the years.
Yeah. We love how you're so impact driven. Yes, being in real estate, making money is great, right? But the fact that you're so impact driven and you're changing lives, and these are stories you get to share with your investors, and we absolutely love it. And that's it's good inspiration for us to continue looking for sponsors that are very value driven in the community and with their investors. So just wanted to, send some kudos over to you and say, like, we love that you're impact driven first.
Thank you. Appreciate that.
Well, I know you have kind of your specific niches of where you focus, but looking at the market as a whole and what's, the shifts that are happening right now, where do you see the biggest opportunities?
Yeah, I guess within, again, the commercial specifically, again, we've done some, if we're talking about different asset classes, I always get nervous during downturns, with classes like office space, retail, flex, industrial, that kind of thing. Because again, if there truly was a crisis, what's the first thing that's going to go in a person's life? It's the extra, right? It's the office space. It's maybe the storage space, but the home where they live, that's usually where that's going to be the last resort, right? And so that's why I think Multifamily, especially right now where there's uncertainty, multifamily typically performs a lot better than other asset classes. But as far as other opportunity, again, I think there's a lot of opportunity right now for seller financing deals. I mean, I'm already seeing it just in the last few months. Most people are offering seller financing. Like they're offering it without you even asking. Before it was like you'd have to go ask and negotiate it, but they're just offering it. Hey, I've got a loan in place at 3% interest rate. You take over the balance of my loan, right? And assume this loan. And so there's a lot of opportunity there. Something that we're heavy, as far as looking at on the data side is emerging markets. So we're always looking at where's the next opportunity for a market to grow, to continue to stay, rent growth, job opportunities, things like that. So I think it's, and we've seen it during COVID, things like where there's a lot of different migration happening. So looking at those markets where, hey, maybe, what's going to happen in this market over the next 5 to 10 years, right? So again, we try to look at it from the bigger picture perspective. I think kind of tying all those three together, like making sure your debt is really good. That's a huge opportunity. I know a lot of guys that have been stuck with bridge loans or short-term loans that are high interest, and then now they're kind of stuck where they can't do anything, they can't refinance. So, but yeah, assumptions, seller financing, and then just focusing on really good markets that are going to do well during the downturn.
Yeah, that's great. What advice would you give to somebody who's brand new into real estate? They know that they've wanted to be in real estate and they're ready to take that first step. What would you suggest for somebody like that?
I mean, it's going to sound cheesy, but it starts with the belief. Like before, I'm not even going to say like any sort of tactical things or like go learn this. It's you have to believe that you can do it. And again, I know it sounds cliche. It's a cheesy answer, but there's literally been times along my journey when I specifically remember I'd sitting in my car and just telling myself over and over, like, I can do this, I can do this, I can do this. If this guy can do this, I can do this, right? And it's not to say I'm any better than anyone else. It's just you have to believe that you can do it. And that's half the battle. It goes back to what we were talking about previously. Like, you just have to believe that you can do it and then take some sort of action, and one step at a time, right? So I just meet a lot of people that's really what they need most, is just that push, just that kind of nudge of like, I can do this. It's scary. I don't have all the answers. I'm going to figure it out, but I'm going to do it, and I can do it. Why can't I? There's no reason I shouldn't be able to do this. I'm no one special. I didn't come for money. I didn't have a network that was different than anyone else. I don't have a brain that's smarter than anyone else. I just have a desire and a passion, and I've worked at it for the last decade plus, right? So that would be my advice.
I want to take it one step further than here, Clay. So let's just say we have someone that new to real estate, maybe first couple of months, and they want to skip some of the initial steps that you did in the beginning, and they want to hop straight into syndications, but maybe they don't know any investors that would be interested. What recommendations would you tell that individual in terms of getting prepared or launching their own syndication? Would it be maybe attending events where maybe other investors would be? Like, is there any advice that you can give to someone that wants to hop straight into syndications?
Yeah, definitely. Well, first of all, I'd say listen to this podcast, right? Meet with people like you guys. Networking is huge, right? So we host a monthly lunch and learn where it's a free event, and we just do it to give back and to network. So yes, for the newer investor, it's like, okay, where do I actually start? Like, what do I actually do here if I want to get into bigger deals or start syndicating? Again, try not to do it yourself, but realize, hey, if I want to get into syndications, I need to learn, and maybe I'll partner with someone, right? So coming to someone like us or like you guys or another operator saying, hey, what value can I add here? I'm happy to go hustle, pound the pavement. I can get on the phones, make calls for you, but can you help teach me and train me? So find a good mentor or 2 or 3, and definitely attend networking events. You're just going to start making connections over time, and you'll soon find kind of your place and what you like to do. I have a lot of friends that they're like, hey man, I don't want to do what you do, but I'd love to help you raise money. Like I can make some phone calls and put you in touch with some people. I'm like, yeah, if you can do that, if you can raise money for us, you get a big slice of the pie. And you'll learn along the way, so like that's value right there you could add without knowing anything else about the deal. Like I literally have a friend of mine right now. he's been asking me for years, like, how do I get into real estate? Like, he's got a full-time job, so he's a busy guy, has kids, but he wants to get in. He wants to get his foot in the door. And I've like, hey, look, we're raising money on this deal. I know you know a lot of people. He's like, yeah, I've got a big network. Like, get on the phone with those people and put me in touch with them. Let's get on a Zoom call together. If you know someone that is a high net worth individual that may have some money in a savings account, whatever, let's get on the phone. And if you can help me raise money for this, I'll bring you in on the deal. I'll show you behind the scenes kind of how we run our, how we evaluate our deals, how we run operations, all this kind of stuff. And so that right there is a simple and easy way to kind of get your foot in the door. And then once you've got your foot in the door, you can kind of navigate a little better where you want to end up. I mean, again, there's so many niches within real estate. So yeah, that's what I recommend.
I love all the things that you've mentioned, because for the viewers that, want to get into this space, like, it's really about being resourceful and being creative is what you're really getting at. Yep. So love it.
Yeah, and you just got to get into it, like you said. I mean, sometimes you don't know what you want to do until you've experienced a little bit of it, right? So you talk a lot about specifically finding off-market deals. For somebody that doesn't understand what that means or how to go about that, could you share some of that?
Yeah. So off-market basically just means a property that's not currently listed either on the local MLS or with a real estate agent or broker. Okay, so how do you find those? That was actually something that got me into wholesaling. It was because I was, again, kind of jumping back in my story, I was flipping homes, but I was mainly buying all these properties we were flipping from wholesalers or real estate agents. But as the market was heating up, it got harder and harder to find deals or find good deals. So I thought, I don't want to rely on someone else to keep bringing me deals, because it's drying up. And that's when I kind of looked into, okay, how do I do my own marketing? How do I reach out to sellers? And so I kind of started learning that, again, going to courses, buying courses, going to seminars. So now we do, we have our whole in-house marketing campaigns that we do. We have teams of cold callers. So really all it means is you need to get in front of a seller or a potential seller that's willing to sell their property. Now, they may not know they're willing to sell their property yet. That's why you touch base with them. You cold call them, or we drive them for dollars. You can drive around, and there's apps and things out there that nowadays that make it a lot easier. But you get a seller on the phone, or you send them a postcard or whatever, and you just say, hey, I know this is out of the blue. Are you interested in selling your property? I mean, that's the basis of this, right? There's obviously a little more to it, but so we do a ton of our own marketing direct to seller. We're pulling different lists and different criteria of who we're targeting, but yeah, that's a big source of our deal flow, is just direct to seller marketing.
Yeah, I wonder if you could brag a little bit, because, and quite frankly, we haven't touched a lot on what you're doing on the wholesaling side, but it seems like you've had a lot of volume there. I wonder if you could share maybe a little bit of the type of volume, but then also take a step back and give people the realistic look of what does it take to get to that volume, right? Because you don't just, fall there. And like you said, you're spending a lot of money on marketing. You have a big team in place, probably internal team and then external team with people that get paid based on performance. So I'd love for you to, step aside from the syndication space and talk about your wholesaling success and how you got there.
Yeah. So I partnered up with my business partner, Brian, about 5 years ago in 2017. And again, just out of the desire to find deals, our own deals to either flip or buy as rentals. And that's kind of where it started. And we kind of had the same goals of, building a multifamily portfolio. So yeah, we started with us sending out, some postcards. We hired a couple of virtual assistants to call these sellers, call these lists that we were pulling and finding. And then it just kind of grew from there. I started hiring a team, some acquisition guys to go out and meet with sellers, a disposition team to kind of sell the deals to other cash buyers. So yeah, when wholesaling, I don't know how familiar your audience is with wholesaling, but it's where we're kind of the middleman, right? We find the deal, we put it under contract with the seller, and then we go out and find another investor or end buyer to buy that deal from us, and we just take a fee, right? So yeah, but we just slowly grew that over the years, that team and that business, so to where we're doing 100 plus wholesales a year. And yeah, it's very profitable. The nice thing about wholesaling is it's a kind of a quick cash business, whereas investing in either syndications or long-term deals, it's a little slower. But that building that wholesaling business kind of gave us the opportunity to find, again, off-market properties as a byproduct of our wholesaling. We're spending probably 50 to 60 grand a month in marketing. Our overhead for that business is very high with employees, with marketing, operations. So it can get daunting, right? You don't have to get to that level to be successful, but that's kind of the level we got to. Is just a ton of marketing. We had a full team of, like I said, virtual assistants out of the country calling people full time, and an internal team kind of meeting with the sellers and doing that whole thing. So that was kind of the wholesaling business, and that's kind of where we've again learned now on the bigger multifamily deals. How do we replicate what we were doing now to go source off-market deals for larger deals that we can syndicate? So it was kind of born out of that business.
Makes a lot of sense. I think most people get into real estate with the idea of passive income. And what I found is the most successful people that end up with the large passive income start with some sort of a daily income, whether they own a business, whether they have a really good job, or they start something like a wholesaling business that can kick off that daily cash to not only cover their daily expenses, but have that extra cash flow to start putting into other deals. And it's kind of nice that you have a business that also brings you the deals that you're wanting for long-term passive income.
Yeah, it all kind of blends together. And it's a similar path I think a lot of people are on. Yeah, it's like, hey, I want to start, syndicating big deals and being an operator. Well, again, there's not a lot of upfront cash or capital in that necessarily. A lot of times as the operator, you don't really make money until the deal sells on the back end. That could be 3 years, that could be 10 years down the road, right? Depending on the deal. So that's why wholesaling is kind of it's a nice middle ground to get paid quickly, but learn how it works and then kind of get your foot in the door and to investing into larger deals.
Yeah. And oftentimes people are going to look at your track record. It's a little bit easier to say, I've been a part of 100 deals when you start your first big deal versus saying, this is my very first deal and I want you to invest hundreds of thousands or millions of dollars into it.
Yeah, the credibility is big on the syndication side, right? And you really need that credibility. It helps to kind of get your feet wet, or again, partner with someone that's already doing it, and that kind of gives you credibility as well.
Yeah. So when you grow something to a very large scale, so now you have two at least businesses with the wholesaling and then the syndication space that, you're not small fries anymore. You're kind of in a space where a lot of people are relying on you for their income and for, other things. How do you keep your priorities straight? How do you make sure that you're keeping your mental game strong?
That's hard. That's a great question. There are days where it's very stressful, right? So there's I tell this to people all the time, like being an entrepreneur or, investing in real estate at the level we are, it's not for everybody. It just isn't. And that's fine. But I think it's important for people to understand what that means, right? And if they want to get into this, understanding what it takes, because there are definitely sleepless nights, high stress, like, hey, we got to go out and raise, $10 million in the next 60 days. And if I don't do that, we're losing X amount of money on this deal as a non-refundable earnest. You know what I mean? So there's definite stress there, and pressure. And again, to make sure you're taking care of your clients and your investors, right? So yeah. And as the more employees you get, right, you're kind of managing, hey, this person, can I pay them? Like, if we have a bad month, what happens? Can I make payroll? You know what I mean? Like, so there's a lot of that. So I've found personally that, again, some of that just comes with time and experience. And my wife's been really good because she's kind of very level-headed. And when those times when I'm kind of like, oh my gosh, this is all falling apart. Like, what do I do? She's like, you'll figure it out. You always do. And it's just like, you know what? It's going to work out. There's always a way. It always does. So that helps, having someone on your side, whether that's a friend or a mentor or family member, right? They can kind of keep you sane. But at the same time, it's the experience of knowing that, hey, you know what? This will work out. We'll figure this out one step at a time. You got to get creative. Got to use your brain. Don't freak out. Don't panic, So yeah, that's what I've done.
I'm kind of wanting to chuckle over here because just being an entrepreneur, there's times where I'm just like, fine, I quit all of them and I'm just going to pull up Indeed and see what jobs there are out there, Yes. And you're laughing too because you know what I'm talking about. And then you just understand it's part of the wave. Yeah. You have your highs, you have your lows, you have your stressful periods, you have your periods where you're just on a high because everything is going great, and you just know that it's just like this, and as long as you can just ride that wave, you're good.
So true.
Well, and this lends to another thing that I would love to touch on for the audience is I'm not a big believer in balance, but I am a believer in harmony, right? And we have different seasons in our lives, and we have harmony within how we operate our life. So how do you what are some of the things that you do to create the harmony between work, hobbies, and family?
Yeah, that's a good question. Yeah, you're totally spot on with there's no balance. Like that's a weird thing to think about, because there's periods of time where you have to work, you have to get this deal done, and that's all that you're 100% focused on that. But once that passes, then it's like, okay, now I have some free time, I'm going to go focus on something else. So for me, I've always been, from day one, even when I didn't have any money or anything, like travel was always important to me. Being a good husband and father was always important to me. So like this past summer, we were in Europe for a month and a half, just with our kids, and like, of course, there's fires happening, there's stuff going on, but again, it goes back to it's okay, it'll all work out. We have team members, I can help out, whatever. So to me, I just turned 40 this year. That's part of the reason we're in Europe, is celebrating my 40th birthday. And the older I get, it's funny how I used to think in terms of months, and now I think in terms of years, and now even decades. It's like, holy cow, it's been 10 years, 10 years ago, I thought when I was 40, I'd have it all figured out. Life would be balanced and perfect, you know what I mean? And you get there and you're like, it's not, it's still just a mess. You're still figuring it out. Well, the thing is, I don't want to get to looking forward another 10 years to when I'm 50 and have regrets, saying, I wish I would have spent a little more time with my kids. I wish I would have done this. Or I wish I would have gone on that trip. Because you get there, and you realize you'll still have problems. You'll still have stress. You'll still have things that need to be done. You have a never-ending task list that needs to get done every day that you don't get to, right? And so that's what I've realized, is that I think as humans, and as honestly Americans, we get addicted to work. We get addicted to that, just every day I have to go and grind. I have to go and figure this out. Well, you don't have to. It's an addiction. We get used to it, but you just have to mentally break away from that and say, it's okay if I don't get everything done. It has its time and place, but focus on what's important to you. So yeah, we love traveling. I love the outdoors, exercising, biking, running. I just ran a marathon, so trained for that. So I guess what I'm saying is, it never gets easier. You have to make the mental choice to do it.
And do you do something specific as far as, do you plan all that stuff out in advance, or do you fit it in, as you go? How do you do that?
I find if I for example, trips, I'll book it out 6 months out, and then I'll just pay for it. A lot of times I'll just buy the plane ticket. That's all I know. It's like, I want to go here. I'm going to buy the tickets. I bought it. Well, then I'm kind of committed. Then I rearrange my schedule around that, right? So that's kind of how I like to do it. I like to just book things way in advance, whether that's concerts or trips or whatever. Then when it comes, it's like, oh, I got this thing planned. I got to go, So maybe I'm not as organized as maybe some thought out. But I just, for me, mentally, I have to usually, my thing has always been, I have to go on a trip every quarter. And that could be a road trip. It could be somewhere close. I'm not saying traveling the world or anything, but for me, mentally, to kind of disconnect and reconnect with my family, I'm like, once a quarter, we're doing something. We have to. I like that. Yeah.
Very cool. Well, Kalani, is there anything else that you would want to ask Clay before we wrap things up?
Well, just my last question. Is there any advice that you have for any of the viewers right now in terms of getting into real estate, getting into syndications? It could be in a vast array of areas here in real estate, but is there any last advice you want to give to some of our viewers?
Yeah, I think, first of all, I think there's a big opportunity coming. So if you're thinking about getting in, now would be a great time. I know that sounds weird because things have been so hot and it's been the worst time to get in, but really in the next 2 to 3 years, I think there's going to be a lot of opportunity. A lot of people are getting out. There's going to be a lot of, unfortunately, people going through hard times that you could help out and get them out of hard times, out of those properties, whether that's single family or multifamily or otherwise. So I think now is a great time to get in and at least learn the basics. And that's kind of what I tell people. The first step is just learning the basic language. Learning the base knowledge of how to talk, so we're talking about syndications, or, what's an IRR? What's an equity multiple? What's the preferred return? Like, those are just some simple language things you can learn to have intelligible conversations with people, right? But then on top of that, I would say just get out there and start networking and start building that network, because your network is going to be your biggest and best friend. That's what I found as we've started, raising more capital, bigger checks. It's all about the network. It's all about the network. That's all it really is. All the knowledge-based stuff, that can come, and you can learn that on YouTube University or, get a good mentor, but it's building those networks that are going to last you a lifetime, that are going to help propel you into the next level. So yeah, again, get in now because there's opportunity, and then just build that network. That's what I'd suggest.
Okay. Well, Clay, thanks for coming on today. And as always, be sure to tune in to the next episode of the Syndication Show.
Accredited investors only.